Hi, good afternoon. My name is Ram Dhamija. Welcome to my channel. Today is 19th of June and it's a Nifty expiry day. It's been a okay day. It's been a range bound day and the market is actually taking its own time to pick up a direction. And today it was kind of a doji candle wherein the open and the close more or less is similar. The range was very small and I think the highlight for the day is that we did not break down. The way the options were stacked yesterday, the open interest was very low, so it was looking like we might have a breakdown today. And the news flow has not been very good. The geopolitical tension continues. So, seeing all that, it was looking like today we might have a breakdown. But I think it is maybe because of the expiry that the breakdown did not happen, and we are pretty much ending at 24,800 odd for the day. The puts and calls as I speak are evenly matched at 25 crores each, and this was very different yesterday wherein there were about 20 crore calls in the system versus 12 crore put in the system. So the open interest was at zero point 0.6. It was not looking very nice, the put call ratio. So all that has got taken care of. I'll take you through the highlights for the day and how the coming days are stacked up. So this is the Nifty. As you can see, there is just no movement except for the fact that it moved up in the morning and it made a high of about 24,863. It was looking like it's going to be up day today, but from there it has just been in a range and we might end at somewhere around 24,800 odd. So it's been a peaceful day that ways for expiry, but the premiums were very low for options. So this is the more important chart. This is the Nifty 1 day chart. Now if you see over here that we have been in this range for many days now. It's almost been from 15th May, we are pretty much to 19 June. We have been in the same range, not in fact 15th, the 12th May when the ceasefire news had come out, to 19 June. It's been almost a month and a half kind of a consolidation that's already happened. And we tried to break on the upside. 25,250 odd becomes a resistance, and we try to break on the downside, which we saw the day the Iran-Israel news conflict broke out. This is the bottom, which is 24,500. This is the range where we have been stuck. To 2 days, it has been very small movement. This is typically indicative of that there could be a range breakout on either downside or upside, and these are the two levels that we have to watch out for. If it breaks on the upside, then 26,200 is the next level after we break out 25,200. So basically that will be the all-time high, but the chances or the news flow is not looking all that great. Whereas if we break on the downside, then 24,500 is the first support, which is the war low, Iran-Israel war low. And then the second one, of course, is 23,900 odd, which is the India-Pakistan war low. So these are the two levels that we need to watch out for. Of course, then the ultimate bottom at 21,700 exists always. So this is what we have to look out for. This is the range that we are playing with, and until unless we are in the same range, it should be okay. We have been consolidating now, and if the news flow, my sense is that if the news flow is not bad and the news flow resolves itself out, then we can make a dash towards all-time high. But if there is a news like US is getting involved, and because of that the US markets are down, as I'll show you over here, US markets are pretty down. Yeah, so if you see over here, US 30 is down -3.4. These are all futures. US 500 is down, US tech is down -0.48, US small cap is down, and S&P VIX is about 21. So if US gets involved into this geopolitical war, then there might be some issues, and the markets might see some amount of jittery behavior might be there in the markets. But if everything resolves itself, if there is some sort of a deal that's reached and the fighting stops, then I think there would not be any bad news remaining. And yesterday the Fed meeting is also out of the way, so Fed did not cut rates as it was expected. So there are no major triggers per se, and in our economy a lot of things are good. RBI has cut rates, CRR has been cut, so there's a lot of liquidity, the SIPs are strong, the results are okay. Inflation is at all-time low. So a lot of positives are there for Indian markets to actually go up. So we will have to see once this news flow is resolved how the markets actually end up behaving. Now this is what the markets are from their all-time high. Now if you see uh, private bank, Nifty Bank and Nifty are almost at their all-time high. They have broken it many times. Mid cap and Nifty are almost 6% away from their all-time highs. Small cap is now 10% away, down rather from its all-time high. And then these are the other indices: Pharma 10, Metal 10, Nifty Next 50 minus 15, IT is minus 16, FMCG is dropped a bit, minus 18. Alpha is minus 18.6 and momentum is about minus 20. So these are the levels from the all-time high, and of course this rally is clearly being led by banking and financials, which I've been maintaining. This is today's performance. So if you see how today all the indices are, I'll just take you through. So small cap is the worst hit at about minus 1.7, mid cap is 1.4. So there is weakness in the broader markets today, which is not getting reflected, as I told you, with Nifty, because it's a Nifty expiry. So probably a lot of positions are built accordingly. So Nifty might not slip that much. IT is down minus 1, Pharma is down minus 0.5. So there is nothing which is holding up the market per se, except for financials are doing relatively better than the others. Now let us come to how the global cues are stacked up. The global cues, as I said, Nasdaq futures are down. We have already talked about that. The US 10-year is slightly going up, but it is still less than 4.5. So till that time it is lesser than that, it's all fine. Similarly, US 30 years is less than 5, which is all good. S&P VIX is starting to inch up. It's at 21.3, which is slightly worrisome. Bitcoin is at 105, which is fine. Oil, this is a major one. So oil, I'll take you through the chart. Oil, you can see, is almost at 77. It's a worry. It's a worry because when the news of this war had broken out, it had gone to somewhere around 75 odd, and it's now at that same level, the same levels that were seen about almost 6 months back, right? Oh yeah. So oil is a worry. Oil 77 is, it's not a worry right now, but if it goes more higher from here, it will be a worry. So if it goes down, it's good for us. But if things get worse on geopolitics front, then this becomes a big worry for us. Apart from that, gold is making an all-time high. Silver is the one which is breaking out, which is good news for us. And currency is weakened a bit. It's gone to 86.7. It was hovering in the range of 85, 86. So all in all, what are the main things that we need to look out for? One is the Fed decision, that's out of the way now. The dot plot, as they say, it's expected that there will be two rate cuts in March, and the two rate cuts will happen this year. Okay, and when are they going to happen? Maybe in the next couple of meetings they are going to come about. Bank of England decision ahead. So Bank of England decision is expected on Thursday, and broadly they are also going to hold their rates. So this is the thing internationally, but the main thing is the geopolitical news. That's with the large buildup of US, etc., and Middle East, and things are looking slightly tricky on the war front. So till that time, those things are resolved completely, the markets might not breathe a sigh of relief. And every day, some news flow comes and the markets fall down, and then that news flow is probably not that serious. The market tend to rally. So we are stuck in a range, as I have said, and clearly we are going to move out of this range once this news is settled. So let us see. But in any case, this is a good time to build your portfolios. Whenever the market falls, you should add. I've been maintaining that for a long time, and you should do it in a structured way. And if anyone is interested in building the mutual fund portfolios, they can contact me through the Google form in the description below, and I shall help you make a good solid mutual fund portfolio. Uh, So yeah, coming back, I mean, you should look at opportunities if the market is giving you opportunities. Like for example, all the small cap, mid cap, momentum, alpha names had fallen a lot in this April correction. They had fallen to almost minus 40% odd, and we saw that within 1.5 months, most of them recovered 30%. So anyone who invested, during this entire fall would have more than made up within the last 1 month. So whenever the markets are falling, you should know what you want to add, and you should take the plunge with some sort of system in place, knowing what you are entering into. So if you do that, it usually helps, because market on the way up are not possible to catch. They will just go up 4% one day, as we saw after the ceasefire news had come. 4% in one day. How will you ever catch that? So anyone who missed at 24,000 would be waiting at 25,000, 24,800, 900. Again, the news came in of Iran-Israel conflict. The market went down to 24,500. So anyone who bought during that day would have benefited. So that is why it is important to have those systems in place. And if anyone needs help in investing, they can contact me through the Google form. So that's it from me now. I hope you had a good expiry, a good week, a good month, especially for option selling.